it was an interesting stat. I think that was in the TD report, and they said that in 2019, we were at a point where the growth in demand, uh, and if you looked at the growth in demand for silver and the existing supplies at that time, we had basically 165 years of supply. So nothing to get excited about. 4 years later, we had 2 years of supply based on based on the amount of demand and demand growth. So that's a dramatic shift.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited because I'm joined by my old friend Peter Krauth, who we probably should be doing this more often, Peter, although it's a pleasure to have you here today because a student of the silver market, author of The Great Silver Bull, which I enjoyed reading and have my copy right back there, hopefully to get signed one day by Peter. A lot of great history in the book and a great foundation leading up to where we are now, where we continue to get reports from the Silver Institute that the market is in a deficit of around 200 million ounces, has been the case 5 years if you include the metal that goes into the exchange traded funds, 3 years if you do not include that. But as we've talked about on the show before, there was that TD Securities report a couple months back that warned of the next silver squeeze. And ironically, Peter actually was doing some research and numbers on that a couple of weeks earlier. Maybe TD Ameritrade is reading your research, Peter, but you addressed an important question of when does that become more of a problem? And we will dig into that as well as some of the other interesting things happening in silver. So, great to have you here. And before we get started, how are you today, Peter?
I'm fine, Chris. Thanks for having me. It's always a pleasure talking with you, and I'm pumped to get into silver and talk about everything going on in this exciting market.
Well, then why don't we dig in because there is a bit to cover here. And I will pull up here again is the TD report. This, hopefully our faces are not covering the date here over on the right. If so, it was April 2nd of this year. And TD was talking about a silver squeeze you can buy into. And basically, the key part here is for many years, market participants could safely assume that the behemoth stockpile of above ground silver would be sufficiently large to satisfy any reasonable scale of demand growth. Today, we believe this assumption could potentially be challenged within the next 12 to 24 months. So, with that said, Peter, why don't you start with what you found before this report came out and where you think we are at this current time?
Yeah, so back in March, I spoke at an event called the Metals Investor Forum. This was in Toronto, actually, just the 2 days prior to the PDAC conference. And for a month or two prior, I had started digging for some answers. People had been asking me, and naturally, I'd been wondering myself, why does the silver price look like it's capped or felt like it was capped at, say, 28 or $30 if, according to people like the Silver Institute, we are in a structural deficit situation. We are now producing or supplying about 1 billion ounces of silver per year, say to 80 to 85% from mining and 15 to 20% from recycling. And we're consuming 1.2 billion ounces. So that's a huge deficit. With that in mind, how are the silver prices not sort of exploding higher? And I kind of, came to the conclusion that there had to be some way that, in my view at least, industrial users who are these consistent buyers and really truly require the silver on an ongoing basis, we're getting supplies. We're getting supplies without having to pressure newly produced or growing production from mining and or recycling. So when I started doing my digging, I thought, okay, well, where could there be sort of, secondary supplies, decent amounts of silver that are just already there sitting above ground? And so actually, if you look back far enough, say about 15 years or so, not every year, but on balance, there was at least a few years of what we call maybe surplus, right? So between what was being consumed and what was being produced and brought to market through recycling, et cetera, there was more supply than there was consumption. And so that supply was sort of shunted into, uh, the ETFs, going to the futures markets, and the three big markets are the Shanghai, the LBMA, and the COMEX. So I said, well, let me look at if I can dig up some inventories for these markets. Let's see what those look like. Well, I was able to find these, and lo and behold, there's a clear pattern. So from about 2021, depending on the market, either early or mid 2021, you start to see these inventories of what I call secondary inventories, really sitting, these above ground piles of silver sitting in these markets and starting to really draw down quite consistently from, as I say, early to mid 2021. In some of those markets, the drawdown from early 21 to early 24 was to the tune of anywhere from 40 to as much as 70%. And so we're talking about, maybe 1 billion ounces or more coming down to maybe 300 million ounces. And if more specifically, what's interesting is if you look at the LBMA, they actually store a lot of the silver for the silver ETFs. So you can't account for that. You have to keep that aside. You have to look at silver ETF inventories on their own. Those have been drawn down. And if you look at uh, what is actually available for delivery in some of these futures markets, it's often a small portion of what is actual inventory. So in other words, they have these inventories, and if you look at what is considered available for delivery, they're just a percentage of that. So I realized
And
that,
Peter, if I can just, for people watching at home, here is the
sure.
LBMA holdings with the gray part, about 16,000 tons, what is in the ETFs, and 10,000 tons remaining.
Yeah, so you can see from that chart, thanks for pulling that up, that the ETFs represent a big chunk of the overall. Really quite impressive in terms of how much that belongs to ETFs. So in any case, to kind of get to the point was at the end of that, when I saw these charts, I said, wow, this is amazing. More than likely, I mean, if you apply logic, you figure this is where a lot of the mostly industrial consumers, to some extent investors as well, but have been tapping silver, above ground stockpiles. They're able to go buy this silver at spot price, not pressure new production, draw that down, and the price was able to stay more or less flat, capped at 28 to maybe $30. And but that can only go on for so long. These inventories have been drained pretty considerably. I'm going to say probably to the tune of at least 70%. And it was an interesting stat. I think that was in the TD report, and they said that in 2019, we were at a point where the growth in demand, uh, and if you looked at the growth in demand for silver and the existing supplies at that time, we had basically 165 years of supply. So nothing to get excited about. 4 years later, we had 2 years of supply based on based on the amount of demand, and demand growth. So that's a dramatic shift. And their estimates were the same as mine, which was that, earlier this year, we were at a point where we had probably 12 to 24 months of this going on, where we would actually completely drain these secondary supplies. And there would be no more silver available to just go and tap like that. So obviously, there are supplies all the time that we can't account for completely. There are these large hordes, high net worth investors, small investors, probably a few institutional, some savvy institutional investors. Those can come to market, but I believe they have to come to market at much higher prices. So there is a real potential, I think, for a new squeeze within, maybe 12 to 18 months at this point.
Yeah, a lot of good points you mentioned in there, and I'm glad you touched on the retail as well, because maybe we'll not call this exact, but it felt to me as if 2021 and 2022 You saw in particular LBMA and COMEX coming down. Then that kind of leveled off towards the end of 2022. In fact, I will pull up the COMEX registered here, which interesting picture. Obviously, here we are at the peak in 2021 at 150 million ounces, got below 30 million ounces last year, and I think reasonably so. People are wondering that's getting a little bit low. And again, sometimes metal comes back in. So here we have it back up almost 80 million ounces today. Um, but it seems like what has really, at least the most likely culprit to me, is that we've had a lot of retail selling over the past year. I hear from the retailers I talk with a mix of some people who just need cash. And also, I imagine there's a lot of people that have been selling because they've held it for a long time. Price was over 30 and they wanted to cash in. So, has that been exhausted? Have the people who wanted to sell above 30 sold? And with that said, I've seen estimates. My own estimate is somewhere around 3 billion ounces of silver have been purchased by retail, which are out there. Now, some of that has come back in. We've talked to a wholesaler who has confirmed that he's talked with other businesses that are melting some of that down, using it for industry. So there is that factor. There is silver out there. I don't know that we're going to run out, but it might well require a higher price, as you were saying there.
Exactly. And I mean, I'm looking right now at some of the numbers from the Silver Institute, and in their report from this year, I'm seeing that net physical investment was 208 million ounces in 2020, 284 million ounces in 2021, 337 million ounces in 2022, and then that dropped significantly. I'm going to say by about 95 million ounces to 243 million
43.
ounces.
That's right. I've
Yep,
studied that figure.
exactly.
It's interesting, especially because they do have a breakout there, and I've been wondering, well, is China actually buying retail silver? They only had 7 million ounces, and there was actually a good roundtable with Vince Lancy, Tom Luongo, and Eric Young, who I think people know of on Twitter, who is Chinese, and he was saying that people are not buying silver like silver bugs yet, and
Right.
that it's still very low and worth checking out. People are watching because he provided a lot of insight. But would you say it's fair to say that most of the demand, based on the available data points we have, is still from China, is mostly industrial? I have not seen evidence of them purchasing silver retail on a large scale. Does that sound about
Yeah, I mean, for me, it's mostly anecdotal, but yes, I would agree. That's certainly the sense that I have, that it's almost all industrially, focused.
Okay, and I will pull this up, which people may have seen. I'm guessing you saw. Here was the Chinese
Yeah,
silver imports, quite a spike here over the past 4 months. And Peter, I've mentioned the story you told about a conversation you had at PDAC with a producer and what things are like in terms of the people they are doing business with in China. And perhaps we could revisit that here and share with people what you found out.
absolutely. So this is a good sized primary silver producer, and they told me that they sell about half their production to China and about the other half to the West. And they said that their Chinese buyers are very, very anxious to get their hands on the silver. They're prepared to pay a couple of weeks in advance of delivery, and they're willing to pay. This goes back to March. They were willing to pay $3 to $4 over spot to get that silver. That's how desperately that they actually wanted the silver. So, basically what he was telling me was that they can totally sense how tight the market is, how restricted supply is versus demand, and that was a clear sign to them of pointing towards that.
Okay, and I will add on to that something you and I talked about earlier today that I think I've mentioned before, but I talked with a different, I'd say one of the larger silver miners, different company, but we ran into them at the Sprott show back in July, and we're saying, do you have any thoughts on when there will be someone arbing this, and he told me that the smelters in China normally get paid $175 per ton for the treatment charges for silver concentrate. They had been lowering that to the point where they were actually paying a credit, but basically they were able to get the metal, and they were arranging deals to bring the metal, and because they were able to take advantage of that. So
That makes sense to me. I have the sense that um, solar panels and solar panel production in China could well be subsidized. I'm just saying I don't know that for a fact, but it would not surprise me. The prices keep coming down, and yet I have a hard time understanding really. I mean, you obviously you can have economies of scale, that there's that, but the prices keep coming down to in terms of the final prices. If you want to buy panels, if unless you're looking at tariffs that are added on top of that, but the initial prices keep coming down from Chinese manufactured solar panels. And I think that, if their costs, or if many of their costs keep going up, then it's, to me, logical to conclude that there's some level of subsidy going on. It helps them dominate the market, obviously, because they can keep their prices low. People want to keep buying from them. And they're already at 80+% of worldwide manufacturing capacity. And the International Energy Agency has said that they see by 2027, solar will be the dominant supply of energy globally, surpassing, I believe it was coal for the first time ever. So there's a lot more money that's being pushed into manufacturing of solar panels, and it is actually, I believe, also surpassed oil now in terms of the amount of money going into that industry. So that's pretty impressive when you think. It just means that a lot more of the world will be reliant on China for solar, which is, as I say, again, becoming more and more of a dominant source of energy.
yeah, and you also had an interesting comment on something I've been thinking about, where I've been reading about the glut of panels, where they've built a lot. And so, okay, on one hand, if you're building the panels and putting silver in them, it's accounting for it. Yet have been wondering, if there's a glut, do we some point see a slowdown? And along with that, when we hear these COP 2050 projections, is I'm wondering who's going to be buying all of that. Now, in the Inflation Reduction Act, there were the subsidies, so some government get money going into that. If there's anything you've heard about, is the government going to be doing in terms of some of the gigawattage that they're looking at, outright saying like, all right, we want this plan on an industrial scale, and they're printing money to pay for it. But anything you could say about where the money comes from to even attempt to get to those goals, and also how the oversupply of panels could factor in, which also does bring down the price and could make it more affordable. But anything you could share on those?
Yeah, I mean, you're right. The Inflation Reduction Act is very supportive of solar because it's supportive of anything that's renewable and green energy, green transition stuff. So there's no question that that's very supportive of the solar industry. I think that one of the things that we need to consider too is that, and so, well, I have a couple of thoughts. One is that, in my view, at least, we're heading towards a recession. Um, that's likely to, at some point before long, to mean more stimulus. We don't have to look all that far back. There was COVID. Prior to COVID, there was the financial crisis of 08, 09. And I remember very clearly that when the stimulus came in 09, let's say, and for a few years after that, you have to sell the idea, right, of printing all this money and just doling it out and supporting different industries and so on. Well, it's one of the easiest things to sell is infrastructure, because you can argue that more people benefit from infrastructure. And then to layer on top of that, because green energy and renewable energy are friendly to the environment, or considered friendly to the environment, people will more readily accept that as well. And so
Actually, Peter, I got a presentation of the sales pitch that the Federal Reserve used in case you've never seen this before. I think that was pretty much it, as we're
yeah,
finding
that
out about 15 years later. So,
that pretty much sums it up. I think that's excellent. That's tremendous. I love it. Um, so as I say, it made focusing on infrastructure easy. It made focusing on renewable energy easy for the stimulus. It was no different when COVID hit, and I don't think it'll be any different this time around when the stimulus comes again. Because if there's one thing you can count on is more stimulus. And as I say, I think a recession is pretty much around the corner. So that will help push more and new money towards this sector. And something else to keep in mind is that even if, let's say, production were to just go flat, let's be conservative. There isn't a big growth in panel production, and there's sort of a flat ongoing yearly number. It just stays there and it goes on for a few years. There's still the whole technology aspect of it. And so until probably this year, the dominant technology has been something called PERC. And so and there's some really interesting research by a group called Rystad. They um, have said that they saw already the next technology from PERC is called TopCon. TopCon takes arguably up to 50% more silver per panel. Now, TopCon just about 3 years ago was about 10% of the market in terms of new manufacturing capacity, that technology. This year already, they think it's going to represent 65% of new manufacturing capacity. So, as I say, even if production were to flatline, we're still transitioning to more efficient panels, which require more silver per panel. So, I still see growth in silver demand, even if we don't produce more every year of solar panels, just by this transition to new technologies. And by the way, after TopCon, the next technology that's more efficient yet is called HJT. That requires up to 150% more silver per panel. So the likeliness that we're going to require less silver for solar, I think, is very low, really very, very low.
yeah. And of course, now we're hearing about a Samsung battery for electric vehicles that
That's right.
looks at 2 ounces or 2 pounds of silver
Yeah,
versus 5 grams. So
right.
we'll see
I
how
mean,
that shakes out. And
yeah, yeah,
especially appreciate what you mentioned about the recession because I've thought of that. We hear, well, if there's a recession, industrial demand could go down, which is very true. Yet, if there is a recession, it's hard to imagine governments and central banks standing aside. And I can't say this 100%, but I can say when I look at, well, how would they stimulate at the same time they're sitting here talking about green energy? I mean, you would have to think there's a darn good chance that there is a recession and they're going to print money and flood it in there. Where is it going to go? I mean, I haven't seen them write the new proposal yet, but if I had to bet my 2 ounces, as the great Peter Spina often
yep,
says, that would be it. So,
exactly.
another thing that just came up recently that I would love to get your opinion on here. I think you will find this one fascinating. This is from an interview we published yesterday on our channel. This is with Chris Ritchie of Silvercrest, and they have what is, correct me if I'm wrong, but as far as I know, is one of the lower cost silver projects out there right now. Is, in your assessment, a fair statement, Peter?
Yep, absolutely. If I have to go from memory, I think there's somewhere around $10 to $12 production.
That's cash costs or all in sustaining?
Um, I am not sure.
Well,
Honestly,
well, I have something that will add to that, which I
okay.
think you might be stunned by.
Okay.
So I was talking with Steve Cope of Silver Viper yesterday. So we'll play the clip and then a quick second of my reaction and then Steve's reaction. I promise it's not that long. We won't sit
Yeah,
here
sure.
and make everybody watch YouTube inside of YouTube, although I
That's
guess you could
right.
be watching YouTube. But Anyway, let's take a listen to what this is Chris Ritchie of Silvercrest.
And at the time of entering commercial production, what we did is we said, well, what's the true cost to produce an ounce? Like you mentioned, companies that their stocks aren't doing very well. A big chunk is this is a really difficult industry. It's hard to bring on new supply. We spend huge amounts of capital over long periods of time. And the ASIC or all-in sustaining cost that people typically reference, it's an operating cost of today. It does not include all of the costs, all of the risks, all of the inflation. So what we did is we just started from scratch and we said, what is the true total cost for us to produce an ounce? Right? Pretty basic stuff.
Yeah.
So it's the cost of the land, it's years of exploration, it's developing the mine itself, it's building the plant, it's putting inflation on our costs. We threw everything, at it and then divided it by how many ounces we have today. And the number we got was over $25 an ounce pre-tax.
Okay.
So, Steve, obviously there's his comment, and of course there's a difference depending on which company you're looking at. Again, they're one of the lower cost producers, yet obviously any thoughts you have there, although even more specifically, if Chris Ritchie of Silvercrest is saying that, is it reasonable to assume that if investors want to back a project to bring additional silver supply to the market, that at least using that estimate of $25 plus as a baseline is reasonable?
100%. This is something, like you say, we've talked about for years.
So, Peter, there you go. Obviously, there's different companies have different costs of production, yet I was trying to think of what is really at the heart of it. And if you're looking at, all right, if somebody wants to bring additional production online, I don't know if they're going to Steve Cope did not think they're going to realistically get it out there at a price cheaper than Silvercrest is producing. And obviously I was stunned to hear him say that Silvercrest, the true cost would be over $25. So love to get your reaction to that.
Well, to be perfectly honest, I spoke to Chris. Goes back several months, and he presented the same sort of thesis to me when we chatted, and I agreed with him because that's a perfectly fair way of pricing it. Because in a way, why would you not, right? You're trying to be as honest, as fair, as conservative as possible. And if you do add all of those costs in, which sounds like logically the right way to be doing it, that you should include all of those things. And so I don't want to speak for Chris, but it does make sense to me that, they have policies where they've decided that unless they can find projects sufficiently attractive to expand, to buy, whatever it may be, that a portion of their production will stay in-house. They're going to grow their pile of silver because, as he also explained to me, they have to look at, if they were to sell that silver, get cash in return, what is the most productive and most useful use of that cash? And frankly, they're a silver producer. They've produced silver. The idea of investing in a silver producer, to at least some extent, is to get inflation protection. Well, what better inflation protection is there than sitting on some pure silver? Your cost at that point is insuring and securing. That's it.
Yeah.
So to produce that silver, 5 years, 10 years from now is going to cost you what? You can just go to pick it up and then sell it at very likely a much, much higher price. And you had zero risk in the meantime. You had a small cost, as I say, to insure and to store. So I think that they're being very wise about how they're treating their production. And I think a lot of other producers maybe don't have the luxury, but to some extent at least should consider doing something similar.
Yeah, and we've seen First Majestic has done that at various points in the past couple of years. Endeavor Silver has also done that. First Majestic has been actively trying to sell as much of the silver through their store as possible. So, that's three significant companies of the silver primaries. So,
That's right. Exactly.
I guess last question for you, Peter, and I know you're obviously very closely in depth with the silver mining stocks in general. Does what Chris is saying match with cost of production? Again, we'll call that a true cost of production, with the cash costs are all in sustaining costs, not factoring everything that does. I've been seeing in the reading I do that many of the silver producers, not all, but of the silver primaries, a lot of them are getting into that mid 20s area. If you did do a similar true cost, does that match what you've been seeing, or anything you could shed light on there?
Yes, it does. I mean, I'm not going to get into specifics, but in fact, you know, Silvercrest is a bit of an anomaly, right? They have a very, very high grade mine that's already built, and so they probably have amongst the lowest costs. And so, if you're going to compare them on the same basis with other producers, I can only imagine that most of the other producers are going to actually be at higher costs than they are. So, if they're at 25, if you do a true all in, then the others have to be at 30 plus easily. So, I mean, that is all very bullish for the silver price, because you have to ask yourself, why would you participate in this? Why would you build such a business if you can't ultimately, over a decade or a couple of decades, turn a fair profit? And yeah, I mean, the only answer to that is much higher silver prices.
Yeah, well, that is it's quite a dynamic that's sitting out there building, and in either case, I appreciate you shedding light on that, and hopefully that is helpful, because we'll see how it plays out. I don't know. We sit here episode after episode looking at these dynamics, and
Right.
stunning in some senses, but we shall see how that goes. And Peter, perhaps in wrapping up, a lot of great things you shared here today, and just if you could let people know how they can follow you or get access to your research as well.
Thank you. So yes, I mean, the best way to reach out and see what I'm doing is to go to silverstockinvestor.com. That's my, I guess you could call it a microsite. I'm now partnered with Jeff Clark of the Gold Advisor. So our portal site is called thegoldadvisor.com. You can go there, see my letter, his letter. We have a few services and a lot of great research. There's a lot of free stuff. We have articles, videos, interviews. His letter called Gold Advisor is actually a free letter where he follows several companies, so people can get a lot of his research for free. He has a paid newsletter that he started earlier this year called Pay Dirt Podcast. And I have my paid newsletter, Silver Stock Investor. I also have
There's a
uh,
good book right down there too.
yeah, I'm really happy to say that I've had some great reaction and great feedback on the book. That's been out for 2 years now, and just great feedback. That's really the reward for me, is people telling me how much they feel that they've learned from it, how helpful it's been. And that's not even necessarily about just silver. It's a lot about money and what money is, and about economics and macroeconomics. And so, someone just told me the other day how he told his dad, who lives in Mexico, how much he was able to now understand it and explain to his dad about how macroeconomics work. So my idea was to really keep it very simple, very readable. There's a lot of chapters, but many of the chapters are very, very short. In some cases, they're a page or a couple of pages, because I just said to myself, I want to touch on a certain topic, and I want people to be able to grasp it and understand it, and understand its implications. So the book is to understand the silver market and what I consider a generational opportunity in silver, And then the newsletter is really more of a real-time way of following the silver market and getting into actual silver investments and how to deal with them and all of the quirks and so on around that.
Yeah, well, it's a great book, but also a great reference material. I'm looking at the table of contents here, and you cover, it's great to be able to go and dig into any particular topic or especially review things. I find, we'll see a new data point come back, and often I'll go back and look at something there. So we will have the link to that as well as the goldadvisor.com and silverstockinvestor.com in the description field below. And Peter, before we wrap up, there was one thing I remembered as where I was stuttering before trying to think of it. In terms of what you were saying about the cost with Silvercrest, again, they were building their mine before a lot of this inflation has taken place. So any company that's going out and going to build a mine now has that higher cost. And something that I hear the mining executives talk about, but very rarely and outside of that, is that the labor cost has become a bit of an issue. And there's also not a lot of people who are going out learning how to mine. And that's something that has shot up as well that would also be impacting these companies.
All very true. I mean, I'm hearing the same things. Anyone who, even in the last maybe couple of years, was lucky enough to lock in, long lead time orders for equipment, that sort of thing, have at least mitigated some of the pressure from costs. But absolutely, going forward, that has to all be factored in. We are simply not going to get more silver coming to market unless the silver price is higher. Think about the fact that if you go back to, in fact, I had pulled up some stats between 2016 and 2020, solar alone took 80 million ounces. In 2021, it jumped to almost 90. In 2023, 119. Sorry, 22, 119. 23, 194. That was a 64% increase from one year to the next. And this year we're looking at 232 million ounces. I think that's probably going to end up being a low ball number as well. Through all of this, and so that's just solar, but overall demand has grown 20% in just the last few years. You can go back 10 years and you have not meaningfully surpassed 1 billion ounces a year, and we're at 1.2 billion ounces. So where is the silver going to come from? Honestly, I don't know. I mean, they're actually looking at a drop in silver supply this year, believe it or not, where we've grown to 1.2 billion ounces. It's just crazy. And this is a very quirky, I'm sure your listeners have heard this before, but it's worth repeating. More than 70% of silver doesn't come from a primary silver mine. It comes from gold, copper, lead, or zinc mines. So supply of mined silver is to the tune of 70 or 75% reliant on mining other metals. So for whatever reason, the mining of those metals were to slow down, you're automatically getting less silver coming to market. And at these prices, there's not all that much incentive for new silver production, period. So it's going to get interesting.
Well, Peter, brilliantly done. I thank you again for being here and laying out a lot of complex dynamics, but couldn't have said it better than what you just put in there. So again, I'll remind people silverstockinvestor.com and thegoldadvisor.com, and also the Great Silver Bull on Amazon. So Peter, thanks again. Great to catch up with you. I'll look forward to seeing you in person one of these shows somewhere soon, and we'll pick this up and do it again soon.
Sounds like fun. I look forward to it, Chris. And of course, thanks for having me once again. It was always a great time chatting with you.
Well, thank you, Peter, for today's call. Peter, really good man and one of my favorites in the silver industry. And certainly, I think he laid out some good information, especially as we talk a lot about the deficit in the market and how that could be resolved. So hopefully that was helpful and enjoyable for everyone watching at home. And real quick, before we wrap up, I would like to thank First Majestic Silver, who did have news out on Thursday morning, as they have made a deal to acquire Gatos Silver in a deal that's valued at $970 million based on the closing prices yesterday. and where Gatos shareholders will be getting 2.55 common shares of First Majestic. And this will increase their presence in Mexico as they will be adding the Cerros Los Gatos mine to San Dimas and Santa Elena. Of course, that's also in addition to La Encantada and Jerritt Canyon, which is in Nevada. But this deal is going to be increasing their presence in Mexico and is going to take them up to a total of 15 to 16 million ounces of silver production each year. And when looking at silver equivalent, they're estimating that that's going to bring them up to 30 to 32 million ounces. Again, as comparison, they're on track for about 9 million ounces of silver. So significant increase in the silver production. They expect it to contribute immediately to the free cash flow generation. As they mentioned, Gatos adding approximately 70 million of free cash flow. And also this will keep them at the higher end of the silver exposure spectrum, with over 50% of their revenue expected to be derived from silver. Also, there is additional exploration potential on the Los Gatos property, which will add 103,000 hectares of land and create a 350,000 hectare package. And they are expecting to get some synergy from the deal as they combine cost savings in the supply chain, procurement efficiencies, and cross-pollination of the management teams that will be together on this. And in terms to the benefits here, they mentioned for First Majestic shareholders getting a third cornerstone, long life, low-cost producing underground mine. As the combination of the mine to the overall portfolio, they are projecting all-in sustaining cost of $18 to $20 an ounce. Again, as I mentioned, they're increasing silver production about 6 million ounces and increasing the overall silver equivalent production about 9 million ounces, getting the free cash flow, and again, the synergy of the Los Gatos management team. So I will leave the link to this press release in the description field below. Obviously, a lot in this deal, and you can take a closer look at that. There is also a call with management at 11 a.m. Eastern, and you can find the link to that in the press release. But just wanted to pass along the news. Congratulations to First Majestic and Gatos Silver on the deal. And as always, thank you at home for watching. We'll see you again soon.